All right, buckle up, traders. Today we're driving deep, and I mean deep, into the world of currency strength trading.
And it's going to be a good one.
Got two incredible sources lined up, folks. One's like this official-looking guide to something called Currency Strength 28.
Right, like a user manual.
Exactly. The other one, though, this is where it gets juicy. It's like we got our hands on a real trading firm's playbook.
The inside scoop.
Okay, so before we go full-on treasure hunter, let's set the stage. We're talking about currency strength, but not just, oh, the dollar is strong today. It's bigger than that, right?
Way bigger. Think of it like every currency's got its own personality, its own vibe in the market. Currency strength is about figuring out which one's throwing the best party at any given moment, and more importantly, which ones are about to peak.
Okay, love the analogy. So it's not about predicting the future. It's about understanding these power dynamics between currencies.
Exactly.
Now, this first document, the Currency Strength 28 Guide, it really hammers home this need for 28 currency pairs. 28. That's a lot of currencies to keep track of. I mean, why 28?
So it's not just looking at individual currencies, see? It's analyzing how they move against each other, like a giant comparison, figuring out the winners and losers in this financial dance-off. This cross-comparison, that's what gives traders a real edge.
Okay, starting to see the method behind the madness here. Now, before we get into the nuts and bolts of how these indicators actually work, this guy throws in like this little warning about data. Something about MT4 history updates.
Yeah, and this is huge for anyone serious about this kind of trading. MT4, super popular platform, but it's got to have the right fuel, you know? Accurate historical price data. Feed it garbage, you get garbage signals. Makes sense.
don't want that.
Nobody wants a trading strategy built on like a house of cards, right?
Exactly.
All right, so we're getting a handle on the foundation of currency strength, but this is where things get really interesting. This Currency Strength 28 guide mentions this thing called, get this, the Dynamic Forex 28 Navigator,
Catchy.
right? But then it hits us with terms like sell by momentum, dual momentum, momentum trigger. Feels like we're suddenly speaking Klingon or something.
Uh-huh. Don't worry, it's all going to make sense. Think of it visually. Imagine you're looking at a chart of a currency pair. Yeah.
Okay, got my charts right here. Sell by momentum shows you how quickly each currency is moving, represented by, you know, like the slope of the lines on the chart. Steeper the slope, faster the momentum, like slamming on the gas.
Okay, I can visualize that. So dual momentum, that must be about spotting when one currency's like hitting the gas while the other one's slamming on the brakes.
You got it. That flash, that difference in momentum, that's where traders see potential for, like, big market swings.
Makes sense. Now, what about this momentum trigger on Fib slope? Fibonacci sequences always sound a bit mystical to me.
It's not magic, I promise. But those Fibonacci levels, they often act like support and resistance points in the market, like potential turning points. So when the momentum we've been talking about, when that lines up with these Fibonacci levels,
That's a sign.
can be a strong signal to buy or sell, like landmarks on a map, you know, guiding you towards potential opportunities.
So it's like these levels are saying, hey, trader, pay attention. Something might happen here. Okay, this is giving me a whole new perspective on analyzing the markets. But enough about the technical stuff. Let's see how a real trading firm uses this stuff. This Knudsen capital management document, this is the good stuff.
Now we're talking. This is where we see theory meet the road, right? Knudsen has like 3 main strategies using currency strength, and they're putting their money where their mouth is.
All right, let's break it down. Strategy number 1, hit me.
D-gap outside direction. Remember our racing analogy.
2 currencies, foot race, pedal to the metal.
Exactly. Picture this. The 2 runners, they suddenly diverge. One takes off, the other fades back. That's your cue, right there. You're looking for a clear difference in strength between those currencies.
But you're not just picking any pair where one's up and the other's down. Got to be more to it, right?
You're right, they have filters. Yeah. One thing they do is check the overall trend of the pair, but on a higher time frame, like a 4-hour chart. They want to see the bigger picture before jumping in.
So even if a pair looks hot on a short time frame, they want to make sure it's not going against the tide long term. That's smart. What's next?
Strategy number 2, D-gap inside direction. This one's a bit trickier. It's all about catching those little pullbacks within a bigger trend.
So instead of those big divergences, they're looking for times when one currency takes a breather, lets the other one catch up a bit.
Precisely. They're looking at the angle of the lines on the indicator, confirmation from other indicators. It's all about timing.
Gotcha. So they're not just winging it. There's a system. All right, bring on the grand finale. Strategy number 3.
This one's for the news junkies out there. It's all about news trading, riding those waves of volatility after a big economic announcement.
Oh, so they're not afraid to mix it up in the heat of the moment.
Not at all. But they don't just jump into any pair when news drops. They use a combo of currency strength and another indicator called impulse.
News trading always seems so intense. Got to be quick. So what's impulse? How does it
Yeah.
fit into their strategy? So it's like this extra layer of like market awareness, helps them read the room when big news drops.
Exactly. Impulse basically measures how fast price is moving. So Knudsen, they look for currencies going haywire after a big announcement. Could be up, could be down. They're spotting the ones with the most, visceral reactions.
So they're looking for the currencies about to steal the show after the news drops. I like it.
Haha, yeah. But remember, it's not just about jumping on whatever impulse is flashing. They combine that with the whole currency strength analysis for a more strategic approach.
Gotcha. So it's like impulse gives them the hunch,
Yeah.
but they confirm it with the currency strength analysis.
Precisely.
Okay. All this talk of Knudsen's playbook, I'm realizing, man, these guys have their own language. I keep seeing RR ratio, trailing stops. Help a trader out. What are those?
No problem.
Like-
RR ratio, that's just short for risk-reward ratio, how much you stand to gain versus how much you're risking on a trade. Pretty crucial stuff.
Yeah, no kidding. Got to manage that risk. What about trailing stops? Those sound kind of intense.
They're like dynamic safety nets, basically. As your trade moves in your favor, the trailing stop moves with it, locking in profits along the way.
So you're automatically protecting your gains as you go. That's brilliant. Okay, this Knudsen playbook is full of good stuff. But before we go full trading nerd here, can you sum up their news trading strategy one more time? Like if I'm at my computer, news drops, what am I looking for?
5 minutes after the announcement, you're scanning for currency pairs with a big difference in impulse. One strong, one weak. Then you check the currency strength, see if it lines up, and then, boom, make your move.
Nice. Simple, effective. What's amazing to me about Knudsen's approach is it's not just about one indicator, right? They're combining currency strength with volume, supply and demand, momentum. It's like they've got all these different lenses they're looking through to understand the market.
Exactly. Each indicator tells part of the story. And when you put it all together, you get a much clearer picture of what's actually driving those price moves.
So for our listeners who are like ready to take their trading to the next level,
Yeah.
what's the one thing they should take away from all of this?
Currency strength. It's a powerful tool. But it's not a magic bullet. The key is to integrate it into your own trading strategy. Find what works for you.
Couldn't have said it better myself. This deep dive, it's giving you the knowledge, the insights. But the real magic happens when you start applying it all. So here's something to think about. How could understanding currency strength, even beyond Forex, how could it change the way you approach other trading strategies? It might be that missing piece you've been searching for. And that, my friends, is a wrap on today's deep dive. Hope you enjoyed the ride. Remember, the more you learn, the more you experiment, the better you become. So keep exploring, keep those trading skills sharp, and until next time, happy trading.